Okay, I get it. I'm talking about tax. A lot of people find tax talk really boring. I don't. I really like it. I do believe there's a correlation between people who find tax talk boring and people who complain about others using the tax system to the best of their advantage. So, who pays the tax in this country? It's probably a good place to start. A lot of people say, oh, the rich business owners don't pay any tax. Others say, oh, employees are getting screwed. Both are kind of true, and both are kind of completely wrong. I'm going to break it down for you simply today. I'm going to use some New Zealand examples, so hopefully you can understand how money flows better within this country. Before we start, I just want to say this. If you pay tax in this country, thank you. You're paying for the roads, you're paying for the police, the hospitals, the schools, you're paying for all of that stuff. And without that, this country doesn't run. So this video isn't about shaming anyone. What it's about is it's about showing you how to make better financial decisions within the tax system we have here in New Zealand. So let's start and let's understand the system starting now. High salary employees pay the most visible tax. Let's begin with PAYE, or pay as you earn. It's the tax that is taken directly from your salary. High income employees pay the largest amount of visible personal tax here in New Zealand. Why? Their income is fully visible, it's taxed at source, they have very few deductions they can claim, and they cannot restructure or defer much of it. If you're an employee earning $100,000, you're absolutely paying a chunky amount of tax. And that tax amount is directly linked to your name. That's why high income employees feel like they're being taxed so much, because everything's visible and everything is tracked to your name. How wealthy people actually earn money. Now let's flip the coin. A high net worth individual typically doesn't take a massive salary. Why? Because in New Zealand, a salary can be the highest taxed form of income. Instead, a high net worth individual likes to build wealth through company ownership, capital gains through a property, shares, business value, dividends, trust structures, or timing and deferral strategies, because these are the best ways that you can give yourself the ability to control the amount of tax that you pay each year. A high net worth individual or a business owner can dictate how much salary they take. So if they decide to only take an 80k salary, on paper, it looks like they're not paying much personal tax at all. So this is where the conversation starts to get interesting. Employee versus business owner tax comparison. Let's compare two fictional characters. We're going to have my boy Bill and we're going to have my boy John. Now let's look into them both. Bill, he's an accountant. He's on a 100k salary. His income is $100,000 a year. His tax paid is $22,877.50 a year. So his net take home is $77,122.50. Bill pays tax every single payday. He's got no deductions, no restructuring, no flexibility. But then we've got my boy John. He's a business owner worth $10 million. John takes an 80k salary, pays normal PAYE tax just like Bill. His business profits are taxed at 28% at the company level. So John's company tax is $200,000. His personal PAYE is only $16,277.50. John's personal tax looks small in comparison to his hefty net worth, but John's company is paying hundreds of thousands in tax. His contribution is just less visible. We have to remember that John is in full control of how much tax he gets to pay. If he gives himself a lesser salary, he pays less personal tax. If he increases the amount of business expenditure in his business pays less tax. John is in control of his tax, whereas Bill isn't. Visible tax versus hidden tax. This is a key mindset shift. Employees pay visible tax, whereas business owners pay hidden tax through their business. Now, what I mean by hidden tax, I don't mean it's in the dark, you can't see it, it's not there. What I mean, it's not directly associated with their name. It's not going to come up in their individual tax return. Our example earlier of John paying $16,000 of individual tax and net worth of $10 million, people will start whinging and complaining about that, and like he's dodging his duties. But what they don't see is they don't see John Holding Limited $200,000 in tax. That tax still exists. It's just not showing up next to his name. That's why this rich people don't pay tax narrative is it's incomplete. Why businesses can reduce tax more easily. Here's where businesses get an advantage. They can deduct legitimate business expenses such as travel, vehicles, phone, marketing, office, essentially any expense that is incurred when running a business. Whereas an employee can't deduct any of this, right? So an employee pays tax on their gross income, whereas a business owner pays tax on their profit after expenses. So it's two totally different systems. If you're going to take anything away from this video, I hope it's this. The New Zealand tax system, and any Western world tax system for that matter, is not set up for the individual salary earner. It's set up for businesses. This is because businesses keep this country afloat, and the only way New Zealand becomes an economic powerhouse is through businesses. And that's the only way that everyone's lifestyle can all increase. And the government knows that, hence why they incentivize people to do business, and hence why they give businesses better tax treatment. Government loves business so much that they allow you to fly to Queenstown, have a beer with another business owner, talk how your businesses can help each other out, and this becomes tax deductible. Before you say that's not fair, remember who employs you, remember who's bearing the risk, remember who is contributing to the GDP of this country, remember who's innovating, and who is actively trying to make this economy stronger. This is why the government gives better treatment to businesses. And if they stopped doing that and they started to disincentivize business from occurring, then this would occur. Less investment, foreign and locally, would occur, lower productivity and innovation, fewer jobs and higher unemployment, government collects less tax, talented workers leave the country, and more reliance on government. All of these things are bad things, and they could occur if business is disincentivized to occur here in New Zealand. Where New Zealand tax revenue actually comes from. On screen is a pie chart of roughly the percentage of where New Zealand tax revenue comes from. You've got individual tax, 52%, GST, 25%, company tax, 17%, and other taxes, 6%. This is important because it shows who funds this country. Most of New Zealand's revenue comes from households through PAYE and GST. Companies contribute a lot, but less overall than individuals. But without the businesses, no individual would pay any tax because there'd be no jobs at all. So PAYE is like an indirect tax created by businesses. There's a common thought in this country that people on a high salary need to be taxed more. In theory, you would think this increases the total income tax revenue of the country. If you raise the top marginal tax rate, high income earners should pay more tax on every dollar they earn above the threshold. But if you play this out, it's actually much more complicated. High income earners behave differently from low income earners. This is a key fallacy that low income earners don't understand. High income earners can restructure their income when tax rates increase. High earners often legally shift income away from the PAYE salary and into company profits, dividends, trusts, timing distributions, capital gains, salary sacrifice agreements, fringe benefit structures. This reduces the visible PAYE tax paid. They can reduce their taxable income by deferring bonuses, reallocating income to a spouse or a company, increasing deductible business expenses, move to contractor or self-employed status, use a PI or FIF or another investment vehicle. They may change work behavior also, work fewer taxable hours, reduce overtime or additional work, move overseas, shift to lower tax jurisdictions for part-year residency, renegotiate compensation as pre-tax benefits or equity. These changes all reduce the tax take. High-income people behave differently when taxes change. The Laffer curve is something really important that a country needs to understand when determining its tax rates. It shows that at a 0% tax rate, government collects $0. At a 100% tax rate, the government also collects $0 because no one's going to work if they can't make money. Between these two extremes, there's a peak point where total revenue is maximized. If tax on high earners is below that peak, increasing tax raises revenue. If tax is above that peak, increasing tax lowers revenue because behavior changes. Different countries peak at different points. Now, I'm not saying we're at the peak of the Laffer curve, but I'm not saying we aren't either. Why this matters for you. Understanding tax changes your financial life. It helps you negotiate your salary, understand why your take-home pay feels small, helps you decide whether starting a business makes sense or not, helps you build wealth strategically, and you realize the difference between income and assets. Once you understand how tax actually works in New Zealand, you stop playing blind. People feel stuck because they don't understand the system. My hope is that this video will start you down the journey of understanding the system so then you can actually play to the system. There's a saying, don't hate the player, hate the game. I don't like that saying because you can't hate the game because you're in the game. People get angry that others are playing the game to the best of their advantage. Don't get angry because those rules are wide open to you also. So start learning the rules. If you want more New Zealand financial breakdowns like this around tax, wealth, investing in business, hit that subscribe button. It would mean heaps, and follow along. I'm just starting out, but I'm hoping to get better and better in each video, and any recommendations, I'll take them in the comment section. I'm here to make money simpler for you. And the more simple it is, the more you understand and the better you can play to the games. My goal is to help you grow faster in your financial literacy so you can then grow faster financially.